The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the September 9th, the marvelous Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstances of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 a.m. in the morning. I want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I am here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. Now, if you've got a question, but you can't call in, Stevie has got your back. Go ahead and send me an email. Send that off to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger stand, well, then any and every ping will do. So let's go ahead and get this show started on a marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We begin our day now with a sea of green out there. All the U.S. indices trading the upside. All the sectors inside the S&P 500 doing the same. Is this a bottom? No, we're going to go try to figure that out. If we take a look at the Dow, it's up 404 points, 1%, 36 for the S&P, 92, it's a 0.5% for the NASDAQ 100. The Russell's up 11, Semi's up 33, Traders up 127. You've got gold up 90 cents, silver's up 28 cents. Natural gas is off 10 pennies, 30-year Treasury is flat, and light sweet crude is up 90 pennies, trading out at 68.56. Our leader in the clubhouse, dollar-wise, is CSW Industrials, 23-point move, 8%. Service now, $15, nearly 2%. Impinj is up $15. That's 10% move. Costco up $15, 1.7. Inspire Medical, $14, a 7% move. To the downside, it is Humana leading the charge off about $13, 4%. Asthma Holdings, $11, 1.5%. Lam Research down $6.50. United Health Group down $5.50. Elf Beauty down $5.50 as well. So we got movers and we've got shakers. But let's begin our day by taking a look at what's going on in these markets out here. So there was a signal that was broadcast to you at the close on Friday that you should expect and anticipate some type of rally. Well, what was that signal? That signal was the one-day rate of change of a spot volatility index. Those are the blue arrows on my screen. They typically lead to either a bounce or a bottom. Well, we certainly have the bounce going as we speak right now. We'll go try to figure out where that could extend itself to. So that was certainly something to watch. Now, why would this more likely just be a counter trend rally? Well, one of those reasons would be the spot VIX index, lower left-hand panel, trading below the bottom. Trading above its 50-day exponential moving average out there. The 50-day is at 1741. We're trading at 2080. Now, there is an interesting pattern that is present, and that pattern is we've got the spot VIX index that is trading above all of its forward future contracts out there. That's usually the sign of a bottom. So I don't have that piece of information figured out as we speak just yet, but that is something that's on Stevie's radar screen out there. In the meantime, we take a look at New York Stock Exchange advanced decline indicator, the oscillator. It's trading below zero threshold. This tells us that sellers are still the ones in control of the market. So you get a spot VIX above the 50-day, the advanced decline oscillator telling us that sellers at least have an edge here. And if we go switch over and take a look at the daily. Well, I tell you what we're going to do. We're going to first start with, I will get to the daily equity future contracts, but we're going to go ahead and change, and I'll come back to Again, those of you that have listened to the show, often you've heard about the one-day rate of change in the spot VIX, both above a plus 10% and below a minus 10% out there. And those have meanings for us, and they give us a really good edge, a competitive edge that most folks don't have out there. So when that unfolds, what we look for to signal to you and I that we are likely to see that bounce is ready to start unfolding, the best signals that I've found in all these years of looking at all these charts and trading all these charts has been when the 30-minute time frame chart forms that Rhodes momentum indicator bottom. What's so special about that? What's special about that is a market where if you picture yourself in a pool and you're taking that ball and you're trying to stand on it, and usually you can hold it down pretty good, but eventually you lose your balance and it pops up. And what does it do? It just pops up. It blows out of that water out there. The same concept here with the Rhodes momentum indicator signals. Now, coming into the close on Friday, this is at 5 p.m., as the equity futures were closing out here, we had a bullish hammer candle form inside the ES mini for its 30-minute time frame. Signal A to expect a rally. Number two, we did not have a bottom signal that had formed at that same time for the NQ. We had a pattern that was present, such as the Rhodes momentum indicator signal, but that required a bullish reversal candle to confirm that pattern. That was confirmed on last evening at 6:30 when we got a three-river morning star. If we take a look at the Dow equity future contract, on Friday at its close, a bullish hammer candle. It turned out to be a three-river morning star as well. We don't need two bottoms out there. And then the Russell 2000 formed its RMI Rhodes momentum indicator bottom at 5 p.m. as well on Friday. So basically, 6:30 last night, the NQ went ahead and confirmed with the ES, the Dow, and the Russell 2000, which was to expect and anticipate a rally. Now, we've seen a couple of TD9 count tops that have been negated out here. If we look at the 30-minute time frame chart now, what's important to watch here? Well, on the ES Mini, we can see on this rally up here, maybe hard to detect a little bit, but for the most part, the bottom of its profile is held as support. Well, there's a new profile that formed just as we were coming on the air, and that profile had supported 54.3375. We're trading below that now. So that suggests that the ES Mini should pull back to test another level of support, and that'd be at 54.3325. That's its TD9 count breakout area. On a 30-minute basis for the NQ, not that I have a topping signal, we have price trading below its bottom of its profile, now taking on and close below at 11 a.m. Its TD9 count breakout area at 18.525. A close below that in the next 17 minutes is going to confirm a move lower, and that one should, or the NQ is likely to go target its recent lows out here, the ones that formed on Friday at 5 p.m., and that low is at 18,339.75. The Dow is not sure what the ES and NQ are saying out here, so we've got divergence. In the case of the Dow, it went ahead and confirmed a wave 7 top out there, but price is above profile and it's above its green oscillator and change line. Its signal is neutral. It's got a top, but at the moment its signal is neutral. No top inside the 30-minute Russell 2000. Price trading with inside its profile. The range there between 2097 and about the 2105 level out there. So those are the 30-minute time frame charts. You want to understand the Rhodes momentum indicator pattern out there. You want to especially do that. You know, we're in a market that seems to be getting more and more volatile. So these opportunities are going to present themselves, I would believe, more and more. So just subscribe to Mastering Probability. You can do it for 30 days. Doesn't cost you really anything. And you'll learn this pattern. And you'll put it to use. You'll learn a bunch of other patterns as well. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're going to take you to the 5-hour equity future contracts for each of the contracts out there. If you look at the ES Mini, we can see how that oscillator and change line has acted as resistance on every rally that has of any significance and attempt out there. The oscillator and change line at present is trading out at 54.53. We do have a new profile that has formed. This is below price. So on any rally out here, where if it's just a counter trend move for a 5-hour time frame, price would find resistance between 54.75 and 54.91. In the case of the NQ, the oscillator and change line has pretty much acted as resistance out here, but there's been a couple piercings of it, as you can see. So I'm going to rely upon the ES Mini versus the NQ's oscillator and change line. In other words, a close, and certainly 2 closes above it, would suggest a further rally. In the case of the ES Mini, in order to prove that point to us, you'd need to see a close above 54.92. In the case of the Dow Equity Future contract, that oscillator and change line has really acted well as a resistance level. Now, the current session that we're in, the current candle session that is, does not close until 2 p.m. If we close above 46.67, we will likely get that but an oscillator and change line signal that says, okay, maybe there's more upside action here. Turns out on the 5-hour time frame for the Dow, that upside action could find significant resistance between 40.998 and 41.160. If you take a look at the Russell 2000, also that oscillator and change line really acting as resistance, being tested as we speak, but so far it's holding. It's around the 2110 level out there. If you saw it close about 2110, that would signal a further rally out here. So at the moment in time, we've got the New York Stock Exchange Advanced Client Oscillator in the hands of the sellers out there. The spot VIX in the hands of the sellers out there. The oscillator and change line for these 5-hour charts acting as resistance out here. So as of 11:20, this is nothing more than a counter trend move. Now, if price were to move, and we're backing off right now, so we have to see what this retracement looks like, what patterns may form. Does it form an intraday on a 30-minute time frame, an A to B equals C to the upside? I don't know the answer to those questions out there, but we do know what to continue to observe and to watch. And watching those the 30-minute and the 5-hour time frame charts are important. But maybe there's another chart that's important to watch as well. So let's go ahead and close this down. Let's go take a look at the ES Mini. Let's go rip that apart out here. Not this set of charts out here. The ES Mini set of charts we're going to take a look at are more of the intraday, day trading type time frames. And those are going to be these. So now, when we take a look at the daily time frame, the ES Mini is suggesting a move back to 53.1950. That's its TD9 count breakout level. The 5-hour time frame chart, it's got a TD9 count bottom. Maybe I didn't mention that to you. My apology for not doing that. But again, you can see price run into resistance. We've already covered the 5-hour where a counter trend move would run into resistance. The 4-hour time frame chart, TD9 count bottom. If price is able to close below. Now this bar is going to go ahead and complete at 2 p.m. as well. So if price closes below 54.49, that's going to suggest perhaps a retest of that TD9 count bottom that it has. You've got a TD9 count Rhodes you've just got a Rhodes momentum indicator bottom inside the 2-hour time frame chart, but you've got a TD9 count top that could form. I say it could form because the current bar that we're in closes at noon. That would be bar number 8 as long as price closes above 54.54. We're trading below that right now. So that pattern would just simply get negated, would go away. There would be no type of topping signal. And then you'd be looking for how does price deal with profile support and or resistance. Right now, it's old resistance that could act as support. And that would be an important piece of information at 12 noon. If the level of 54.49.50 holds out there, well, then price old resistance has become new support. We look at a 60-minute time frame chart out there. I don't see anything to assist us, nor on any other time frame out here. So right now, on a 30-minute basis, it's really suggested because of price below the bottom of its profile that we should see a move back to the 54.33 level. Now, on a 54.39 is a 15-minute TD9 count breakout area. So you're getting pretty close, 54.39 versus 54.33 out there. That would be the area to watch. So those are the intraday charts here for the ES Mini. Let's go pull up the NQs chart, see what kind of signals they are offering to us. And then once we're done with this, we do have a few requests that have come in. Of course, I'd love to review your requests as well, but we're going to look at Palantir, a ticker symbol that I don't recall looking at before, CTRA, and we're going to look at the A to B equals CD patterns inside the GDX for Hector and Patty. Now we've got the NQ. So the NQ has gotten back. It's got a TD9 count top. Price has gotten back to a level of support at that 18,383 area. That's its TD9 count breakout level. We get down to a potential bottom, and just coming back to your breakout level or a bottom of profile can indeed be a bottom pattern out there. If that's the case, we're likely then going to see some type of intraday signals on the intraday signals to confirm that. Well, we've already talked about the 30-minute time frame chart that formed that nice Rhodes momentum bottom pattern out here. What we're really watching now is we're watching its breakout level at the 18,525 level. So we've got this bar is going to close here in less than 6 minutes out there. And if we do get a close, right now we're just trading slightly above it, but if we do get a close below 18,525, it would be signaling that we should see some lower price. That's the message from the 10 and 15-minute charts out here as well. The 2-hour chart is testing that oscillator and change line. It's got support, strong support between 18,403 and 18,466. So which way is this going? I still think we are nothing more than a counter trend move, but that doesn't mean that we can't have a counter trend move that lasts for a couple of days out there. If we take a look at the dance steps for the daily NQ, what we'll see is since they moved lower out here, that TD9 count top that formed at the end of August, you're not seeing that on the chart, by the way. We've not seen anything more than a one-day rally. So that's kind of interesting out there. Only a one-day rally so far. So this may be the extent of it. However, we are at that breakout level of support. And so until that area fails on that daily time frame, we're just going to have to pay attention to these intraday charts and their current messages out there. So that's what's going on. We take a look at the ES and the NQ. I believe we have a caller on the line. Let's go see if I can system will work. We got John in Philly. Hey, John, thanks for calling and thanks for holding. How are you doing today? How was your weekend?
Steve, excellent. Hope yours was the same, and thanks for taking the call.
My pleasure, as always. You'd like to take a look at the November contract for soybeans. Tell the folks what you're doing, how I can best help you.
Currently I'm long. I have been probing weeks for a bottom, and of course, during July into early August, no bottom occurred, so I took a couple of scratches, a couple of really tiny losses on failed bottom picking buys. I did somewhere, I don't remember the date, somewhere mid-August, found a buy down somewhere close to 950. So I'm holding a core long position from there, and it's rallied. And Steve, I'll just share this with you. Given the severity of the decline, not only the past couple of months, but the past year and past 3, I can speculate, and I don't know if I'm going to be right on this, but I speculate a major bear market bottom is in place. And oops.
Hey, John, hold that thought.
Hold that
thought. We'll come right back to that major bottom. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're on the line with John in Philly. We're taking a look at the November soybeans contract. Just as we were rudely cut off by the music as we go into commercial break out there, John was just in the middle of expressing to us why he's taking a look at soybeans and thinks there may be a major bottom, which right now is being confirmed by the monthly time frame chart, John, for you. I assume you have seen the screens that are on the charts that are on the screens right now. And if you look at that right-hand corner, you'll see that on a monthly basis, this month completes a TD9 count bottom pattern. So that adds to the idea of a major bottom. I don't know that that's what you were looking at, but please take the microphone now.
Yeah, Steve, just I'll finish off that thought. Yes, indeed. In mid-August, November beans bottomed at $9.55. They rallied 75 cents off that low into the high on Friday.
Yes.
And I'm long from 964 back, I think it was August 20th or 19th. Anyway, that's my position. I consider that I'm working this as a core long position. A low a little bit before harvest begins, which is a little bit early than is typical, but it's kind of fitting with the idea of a low somewhere in and around before or after harvest starts. And so we've now rallied, and as you know how I work things, Steve, with core positions, I hold the core positions and then work on the edges, both shorting and buying to try to, add to generated income. Anyway,
Yes.
That's my current stance. That's my situation. My question is, in your looking at the weekly and monthly charts, if you can share with us what your data says are key levels that are either targets for rallies or levels of resistance that you can see would be levels that a rally would have to deal with and exceed if, in fact, it's a new bull trend.
Got it. So on a weekly time frame chart, we can see that the oscillator and change line has been below its red oscillator and change line, John, since June, the week of June 23rd. So right now, price is trading above that. It's only Monday. The question is, where is price trading on Friday? So the first level that you're looking at, and this is an approximation because, as you know, as price goes up and down, the oscillator and change line is going to change a little bit. But as a guideline, I would say if price closes above 1007, what's on my screen right now is 1009, but if price moves lower, that number is going to move lower. Just trying to anticipate what that actual number might be. But if price closes above that red oscillator and change line, then you have a change in trend signal. That change in trend signal just says, okay, I can run up to the next area of resistance. The next area of resistance, and this is a profile that formed last week, so this is pertinent for you. Now, the support level is at 972. The center of that profile is up at 1,040. The center is closer in proximity to the top than it is to the bottom. So you've got, in essence, a weekly sell zone. And that sell zone is where it's going to get a bit bumpy, I would think. And that's between 1040 and 1074. So those are the weekly levels to be watching, about 1,007, 1040, 1074, and to the downside would be 972. The monthly time frame doesn't really provide us with a ton of information just because of a lack of data that, in essence, that I've got for the November contract, John. But it is enough data to confirm a TD9 count bottom that will complete this month. So right now, the low may, in fact, be the low that you've identified. We don't have anything to tell us otherwise at this moment in time. But the low, in fact, could be some other lower low that would form this month, and you'd still have a monthly TD9 count pattern. I know you didn't ask about the daily, but I do have to throw the daily out there from the standpoint that you're going to...
Hang on.
Oh, okay.
I'm 10 steps ahead of you. It was the TD9 count last Friday, so I saw that. That's no surprise. It just so happens the high last Friday was almost exactly matching the 50-day simple moving average.
Oh, okay.
And agricultural commodities is something traders focus on quite a bit. So we've reversed off that. That much is clear.
So there's also a new profile that's formed. I don't know that it's clear on your.
Sorry.
Yeah. No. So I want to make sure you've got that data. And this is a bearish structured profile as well. And again, the center is closer in proximity to the top. The top is 1025.40. The center is 1007.85, and the bottom is at 978.60. Now, this suggests that we should see some type of move lower. Again, if we're going to see some type of move lower on a daily time frame chart, it should be confirmed by the intraday charts. So if I use a 30-minute time frame chart, we can see a TD9 count pattern that went ahead and completed at 11 o'clock this morning. That pattern would be negated with a close above 1020.25. So that's a number and a level for you to be watching and observing, John. What price should do is pull back and test support. And that level of support right now is in the 1014-ish area out there. So a pullback, and the oscillator and change line, as it was forming this TD9 count top on a 30-minute basis, that oscillator and change line changed colors. It went from red, which was telling us that the price oscillator was below zero, to green. Tennyson's price oscillator is now above zero. When that changes color, the most bullish case, this is what you'd be looking for on an intraday time frame, John, would be price pulling back and testing and rejecting that green oscillator and change line. It's really important. It gives you an additional piece of information when that color has changed versus when the color is constant. You pull back and you test it. So you may be getting your first retracement out there, and those would be the areas that I would be watching. So that could assist you with your working around the edges. Now, what's the shortest term time frame that you would use as you work around the edges? For to take
30 minutes.
Is it okay?
30 minutes. So
okay, all right.
If something is moving quickly that I didn't expect, I might examine something shorter. But I don't trade these near as actively as I do with, say, the stock index. So 30 minutes is all I need.
Perfect. So you're looking for one of two things. You're either looking for a price to negate its daily TD9 count top, earliest that could take place would be tomorrow, or you're looking for some type of retracement into the level of support. And since you use the 30-minute time frame, that 1014 level would be the area that I'd be watching. The one last thing that I can share with you, I know that you know this. I don't know that everybody else knows this. I'm sure you're familiar with the seasonal pattern over the years. This happens to be 33 years worth of data for soybeans. It shows that we should form a short-term top right around now, really Wednesday or Thursday of this week, but we don't use that. We don't use this to timing right to the day. It shows that on average over 33 years, the significant bottoms come in around the beginning of October 3rd. Now, that's a 33-year time frame. Let's see what happens on a 15-year time frame. Same message there. And then lastly, John, I'll share with you what's happened over the last 10 years out there. Similar kind of a pattern. So pattern-wise, you got that TD9 count bottom on the monthly. Looks like you've got a good solid daily, a good solid bottom. Let's see what happens on this daily retracement out there. So I hope that helped you out.
Thanks a bunch, Steve. I appreciate it.
You bet. Take care. That was John in Philly. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So, I'll tell you what we're going to do here. While that is updating a chart, we're going to go take Hector's question first, because I'm going to go switch screens, go over to our black background screens, and it's about the GDX. So let's get the GDX screens up here, and it was specifically about the weekly time frame. And what Hector is doing is identifying an A to B equals CD pattern. He's starting back in the October low. I believe that is. Let me see. Which one are you using? I think you're using this October low. The October low of, it really was a September low, September 9 of 26 out there. We're looking at the weekly time frame. So that's what we're going to use as our A point for an A to B equals CD pattern. So that's going to be A. We can see that price rally. We take the next highest high out here that formed. That was in May of 2023. And yeah, you're using a different one for sure. Let me go. I'm just going to give you the A to B equals CD patterns out here on a weekly time frame that are active. And you're watching this on the screen out there. So the C point that I'm using here is the low that moved back into October of 2023 out there. And that may be another A to B equals CD pattern that you're trying to use. Let me see here. October 23. I think that is. So I'll come back to that one too. But here's what I would call the larger A to B equals CD pattern for the GDX that is in place. And that gave us an initial price projection, Hector and Patty, of 40.36. And give me a moment here. And what price got up to was, where is that date? Here it is. Sorry about that, I couldn't find it. So it got up to a high in the trading week of August 19th. It got up to a high of 39.97. 40.36 was its target. You know, is that in fact the end of the move? Well, on a was that the completion of the pattern out there? You know, that's really a judgment call, right? Whether or not the GDX had completed that A to B equals CD, it didn't get it right exactly. You know, why is that important to us when we take a look at the weekly chart? Well, it would be important because then you would have a Gartley sell pattern. You'd have a sell the D point top. Now, to a certain extent, it doesn't really matter whether it did or didn't. And the reason is, and I want to show you this, we're going to flip back and forth. Hopefully I get this done properly here and flipping back and forth from screens. We're going to now go over to the white background screen. And the white background screen for a weekly time frame, I'm just simply going to expand it out so we're all only looking at the same thing. We can see that it was a Rhodes Momentum Indicator that topped out here. And that was in the last couple of weeks out here. So the high came on August the 23rd. You get a dark cloud cover the very next session. And we have a new profile that has formed. So the new profile that we have, it's bearish in structure, Hector and Patty, the GDX. The resistance resistance level, or the sell zone, is between 38.14 and 38.75. The support level is now at 35.70. I would suggest that because we are below the center of its profile, that it's likely to get down to test the bottom. So I would say 35.70 becomes a likely price target to the downside. If price gets below that, where you can see out here in the GDX, we haven't seen a close below the bottom of profile since this most recent rally that formed a low back in March of this year, March of 2024. Now I'm going to switch back to the other screen and take a look at, you see if I can try to line this up for you. And there we go. We should be back here. Go live. So you're using, I'm just going to get rid of this A to B equals CD. So if I were to generate an A to B equals CD pattern that starts with the October 2nd, 2023 low, so let's use that as a point. What's the B point that's going to be out here? Why isn't this working? Get it to work. We'll fire this up here, just in case this is what you're using. So it's not taking hold. What the heck? There we go. So now we've got our A point. This says your B point is July of 2024. So let's get into July of 2024. You're going to use this high up here, I believe, July 15th, and you're going to make that your B point out there. And then for your C point, you'd come down here and select the low from August the 5th. Yep, so that's lining up. You had a 33% retracement. Remember, like 36% retracements. I would say this pattern here, not that it's not that it doesn't have a possibility, but here's the reason why it's not an A to B equals CD right now. We haven't taken out the B point. So price would have to take out that 39.41 level in order to form that A to B equals CD. Yes, that swing point was tested. That swing point on a weekly basis had a volume of 108 million shares. What was tested a few weeks ago was 92 million shares. So you have a test and rejection of a swing point on lighter volume. That's not a good thing. What this adds to, though, is the idea that price would likely pull back to support being at 35.70. Would I use this one? Well, actually, it's a 40% retracement. Yeah, absolutely. This is, with the A to B equals CD patterns, they're price projection tools, right? They're two things. They're price projection tools where the chart is providing us with 75% of the work. We just have to pick out the A point, the B point, the C point. The rest is done out there. And so when we take a look at A to B equals CD patterns, on many charts, you can find multiple ones. That's why what I suggest is when you see a whole bunch of multiple ones, just go back to the larger time frame. The larger time frame is going to quiet out the noise, and we take a look at this. There are a couple of different A to B equals CD patterns of potential. There's one here that starts with the low in September of 2022. That's going to get back to the first one that we looked at, I believe. But let's go ahead and take a look at this. I mean, there's a clear A point down. There's a clear bottom that we can see, and that's in September of 2022. There's a clear B point where we see a swing point, where we see a reversal in the direction of the market. That's the high from September of 2023. That becomes the B point. The C point is the lowest low after that. It looks to me like that is around October of 2023 out there, and that will give us the A to B equals CD pattern, the real one that is truly active at this moment in time. Now, if we take a look at the B point out here on a weekly basis, what the heck happened? Sorry, folks. Run into some. Let me see if I can figure out why that. I don't want to lock the cursor. There we go. So that B point had volume of 476 million shares. It was passed with 403 million shares, 374. So never confirmed with volume doesn't mean that it's not an A to B equals CD. It also has a bearish structured profile. It's got support down at 31.39, resistance up at 38.54, and the price were to close below 35.68. That's the center of its profile. That would suggest move down to the 31.39 area. So my suggestion always, just to kind of identify maybe a little bit of clarity for you, is understand the bigger pattern. Somebody might say, well, Steve, isn't the bigger pattern starting with the low from back in March of 2020 out there? Certainly, but price has to close above that B point for us to even entertain that. That B point was at 45.78 out there, and we're nowhere near that. So I believe this is truly the active A to B equals CD pattern, Hector and Patty. I hope that explanation helped. And if we do take out 39.41, yeah, sure, you can come back and revisit this smaller A to B equals CD pattern. So that's what I've got for you as always. Thanks for taking the time to write in. I'm sure that helped others as well that are really trying to understand the A to B equals CD pattern. So, and if that didn't answer your question, please write back. We'll make sure that we get that answer for you. Let's go take a look at Palantir. PLTR is a ticker symbol. This thing has been a bit of a rocket ship out there, and it looks like that rocket ship, instead of heading to moon, wants to head to Mars. Why is that, Stevie? At this moment in time, Palantir is trading above its monthly TD9 count top out there, and it closed above its high. Its high, by the way, would be the price point of 33.13. You get a close above that at the end of September. Palantir just wants to keep zooming. The daily time frame, negating a TD9 count top, trading above a bearish structured profile, wants higher price. Weekly chart says the exact same thing. Palantir to Mars. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at Coterra Energy out here, CTRA. This is for Alton. Alton would like to find a place to add to a position. Alton, on a daily time frame, this has triggered a Rhodes Momentum Indicator signal. If you were to get a bullish reversal candle, at the moment it shows up as a hammer. No idea what it will look like at 4 p.m. But if you did get a bullish reversal candle, that would be your time to enter or take an additional position here. Know that you've got resistance at 23.26. That's one battle. The next at 23.49. The weekly chart is traded into a swing point that takes us back into March of 2023 out there with much lighter volume. But the ideal buy there, quite frankly, Alton is at its low that gets tested and rejected. That'll be down at 22.25. That is also the same message of the monthly chart out there. So will the weekly and monthly take its cues from a daily if it forms a Rhodes Momentum Indicator bottom? Perhaps it does. But that's what we've got right now. You've got to wait for that bullish reversal candle on that daily time frame before it gives you any signal to consider adding to your position. Dan inside the Tigers Den would like to take a look at VFC. VFC right now, Dan, has got a Rhodes Momentum Indicator top on a daily time frame, consolidation with insider profile. Support was tested and held on Friday. That's down at 1735. Weekly time frame chart will complete a TD9 count top this week. What price should do is pull back to test support. Level 1 is 1701. Below that, it's around 1577. You've got a consolidation inside the monthly time frame. Price hitting the top of the consolidation at 1875. The bottom is at 1197. To finish the show out today, let's take a look at Tesla. This is for S&P inside the Tigers Den. Tesla's got a great old-fashioned consolidation with inside that daily profile. 208.34 is support, and 234.68 is resistance out there. On a weekly time frame, price is trading below, has traded below the bottom of its profile. But we can see over the last couple of weeks where support has been that green oscillator and change line. Currently printed at 209.83. I don't see any other. I do. I see a sell the D point pattern with price right now testing that oscillator and change line. And on a monthly basis, you've got price trading above the top of its profile. You're really looking for, on a monthly basis, for price to close above its green oscillator and change line, 218.86. Folks, stay tuned for all the great programming. I'll be back with you tomorrow at 11 a.m. sharp. Have a marvelous Monday, and be safe out there.